Hey traders, welcome back. Lesson 7 of the bootcamp course, and putting on a trade and then managing the trade. How we use seasonal trades to also manage the amount of risk to reward we're willing to put on. This is how, when I talk about on a YouTube video prior on how we manage even small accounts. It's hard to do it on a 2% rule when we're trading like this. So what we do is we just kind of have a rule-based system. It's 2 to 1. If depending on what the trade wants to do or give us, if the trade gives us a 2 to 1 opportunity or a 3 to 1, we want to manage it that way because that's how these things move. They using 2% again. Like I said, if you're not too aware, go watch that YouTube video I have. It's not made for $3,000, $5,000 accounts. Okay, not spread trading, but this way it works. So we keep it simple. Once we do that, it'll all work out over the course of time and a course of series of trades. We should always be on top. With that said, let's go ahead and put those disclosures up for a few seconds here before we get into the platform. Excuse me. I'm going to pull up the Seasonalgo, and we're going to start right from the recommended strategies for February 2019, and then we're gonna go on ahead and move forward from there. All right, so we're here. We got Seasonalgo up. You're all logged in. You got your account set up by now, or your demo. We're going to click on the strategies and go to the monthly recommend. It's going to be nice and simple this way. It's going to give us the 2019 of February, which is our current month. I already had put this over here. Don't forget to put 2 legs. Your memory cache will remember these things. So if you had nothing in there and hit enter, it'll look more like this, all scattered. So let's make sure we filter right away for 2. That's how I want to start. Earlier in another prior video, we had found this over here, the live cattle trade. I'm actually currently in this live cattle trade myself because it came up on it as another opportunity in the prior month of January, where it was actually showing a 100% win rate. Looks like it's going down based on the ratio and where the prices are sitting on this month, but it's still a really good potential winning trade. We're going to go ahead and click on that one first. This is the months. It's October versus December. We have plenty of time for it to work, and I'm working a longer term strategy on this trade. Okay, our entry date on this one, if we close this real quick, is February 5th. You might have these dates scattered. Make sure you click here on the enter so you can filter and make the sequential from the earliest dates to later in the month over here. Okay, and then that's how you're going to get that organized for the quickest opportunity, or closest opportunity. I mean, close to you, not the quickest. And when we go over there, remember how I mentioned before, if I click this little chart down here, the analyze button, it'll send it to the builder page. It'll open up a new page, and it's going to go here to the analyze tab and automatically set up my builder. Once I set up my builder, I usually like to get up to 20 years worth of data. If you want to be real convinced, you can get 30. 30 is going to show less chances. I've learned it shows more volatile. The 30 usually pulls away more, but in this case, let's go ahead and do that. And once we do that, we're going to hit build. Once I hit build, I like to look at an interactive chart because there's a price line in here that I like to use. As you see, the 30 separated away quite far, but it looks like it's going to our advantage, so it's not going against us. We want to sell. This is a selling opportunity, see, because it's red, the entry line. It's a selling opportunity that starts on the 5th of February, and the potential exit for full profit is on the 19th of April, which is here at this green line drawn. It doesn't mean you have to get out all the time that late. You can get out earlier if you wish, or you may, if markets turn, we'll end up having to get out earlier. And let's go back to the builder deal here when it was saying what's our risk reward ratio on it. Potential here, guys, you see 2.73, so it's over a 2-to-1 potential risk reward. Okay, I like to hit this button here, interactive. Do that, it'll open up this more detailed page. You can do other things in here, guys. You can add indicators and you can do all those fancy stuff. I don't do any of that here for the most part. Once in a blue moon I do, is just out of curiosity. But you see this line, this particular line box here, it helps measure price as well. Don't also forget that when we're looking at this, the first initial box, in case you're curious how much each point value is, that's what live cattle moves in points. 1 point in live cattle is $400. Okay, right now we're looking at ratio on this price axis over here because we're doing a commodity trade. And the last known price is negative 2.20. Okay, it's Sunday. The markets are open, but live cattle is not. Live cattle trades Monday through Friday within the regular average trading hours of the pits. Now, the open outcry is what I meant. So, there's other things that are open, like crude oil and other commodities like the metals, and those are up and running already. So it's going to be a good time to still show things anyway. So any order I put in today on live cattle won't show any fills, but it may because I'm going to use demo. So I'm going to use demo to demonstrate to you guys. So let's go ahead and, and look at this a little bit deeper. What I like to use this price line for is say, okay, I have a $3,000 account. I'm starting small, okay? And I want to get in this trade. I want to take advantage of the potential reward. I'm going to click on the entry area, and I'm just going to general measure. You don't have to be precise. Just a general measure of what the potential reward is here. I sometimes won't use the 30 line. I'll go here, but if I want to be very conservative. But right now, just for example, let's say there's a potential reward here. Am I on the right commodity, guys? Okay. Well, there's a potential of 21.90. Okay, possible reward. If we take that 30 out, let's even get conservative now. $1,310. Okay, and it shows the points here you're drawn from negative 5.525 to the negative 2.250. So it's approximately where the last price is, right? I'm off by about a tick or two, which is about $10 a tick or so. And the next thing I can do is say, okay, well, from here I want to see what my potential risk can be. What am I willing to risk if it got really crazy? If it made it to this last point, let's zoom in here a bit. Hang on. Let's open this up a little bit here. If at the worst case we got up to this level here where it got crazy once before, the potential risk could be up to $500 more or less. So we're risking 500 to make about 1310. Somewhere, let's say it's closer to 15. It's almost a 2 to 1 risk reward ratio, right? We're risking about $500 on this trade to make $1,500, 3 to 1. I apologize. That's how I kind of look at it. And I'm looking at my chances, right? We're going to go back and analyze these things, and I want to look at, let's say, seasonal, and I want to look for percentages and odds. Now, this pattern correlation, it's very, very tight. These aren't really that good numbers. It's showing me the best is in the last 5 years, 50% pattern correlation. So how would you want to manage that? What's your risk level? You'd have to ask yourself that. Looking back into history on this thing, on the history tab, I see, is our current spread, with the entry date. I see the last year it went really well. The year before it was trading kind of, we see it was trading sideways pretty much. Same with, the other month here, the other prior year, 2016, it wouldn't have been probably would have stopped yourself out before we even went into a small profit. It would have been too far out of regular I don't think we would have wanted to pull that off, right? That's past our guidelines. Sideways here, close to a stop out, ended in a small profit. The year before was a winner. And you could just keep kind of going from there, looking at that. On a continuation, I don't use this too much. It looks, mid-price, kind of a low price, ready for, it looks like ready for some more middle price for me here. Potential to move down is possible. Let's actually click here on the back test, guys, and you can see, all the historical years, what it's done. But look at the max drawdowns. So we know, right? We've said, what we're willing to risk, let's say 500 to make 15. It's had max drawdowns real relative to that number. So keep this in mind historically, how far it's gone against us before it's turned around and become winners, because all the green lines, they're winners. But there was an area you had to, take drawdowns as far as these numbers. So you have to ask yourself, am I willing to take that? Am I willing to take that bet for the likelihood that this trade will work out in my favor? You got to ask yourself these things. These are discretionary trading rules, and this is kind of like where this kind of trading level is, and most modern day trading's gone that way too. I mean, yes, we trade levels on technicals. We may trade this, we may trade that, but a lot of the stuff sometimes, guys, you got to build yourself and be discretionary. I'm not going to make mechanical rules. I've never been a big fan of them. I've checked out people's mechanical systems, mechanical robotic systems, guys, really. I mean, you can't, I don't know where the long-term winning is on mechanical trading systems. Things change. Everything changes in life. Price actions change, things change, fundamentals change things. So you got to use discretion when you're trading. And that's the point I try to make to a lot of the newer coming traders, that like, remember that. This is my opinion. But this is how I feel it works for the long run. Using a mechanical system like a robot, you're not an algorithm. And even then, a human designed that, and a human can go and stop that anytime they want. So you think these big institutions are going to let a computer algorithm cost them a ton of money? If they see something not working in their favor, they're going to pull. They're going to pull all that. They're going to make that algorithm stop. So think like a pro, think like a professional, and you have to have discretion. You have to try to be a manager. You're managing your own money here. What I can say is a guiding tool. What I offer the boot camp is a guiding tool, and what all of us offer each other, we help each other guide and counsel. But you gotta have you have to be the final decision maker. You have to have a hunch. So using all these tools, you have an edge, and it helps your hunch and your decision. Okay, that's how these things work best, guys. I want you guys to also take note here of this drop down, in case you get a little bit confused. If you wanted to, this is a pretty cool, unique tool that I saw installed here recently. I haven't seen it there for a while back. It's a little drop down here of the spread. And if you decide you get confused a little bit in the beginning and you want to know, okay, well, I want to sell this spread then. So how do I do it? Click down here and it'll say to buy this spread, do this. You're going to buy the October and you're going to sell December. But since we're selling this spread, okay, it's going to tell you this is the October, the month you want to sell, LEV19, and you want to buy the back month, the December, LEZ19. Okay? Slowly you'll start getting used to the letters and you'll become, professional with it and things like that. The first notice date of this spread is October 7th. So that's the furthest, you can hold. Obviously, we're not even holding close to that long. This trade is anticipated to be done in April, whether we're right or wrong. So we're usually not worried. We're not worried about being in these things before the first notice dates come up, okay? Which is basically before the contract starts expiring. Professionals start moving their liquidity over to different months, to newer months, or later months, basically, which is new, okay? And just to show you here on the recommendation how I got in this trade, I'm still in it for January. I saw this opportunity here, and I took it. I sold the same contracts. You see October and December? And at the time, it was like a 15 out of 15. It was pretty good ratios for me. Good trade for me to take. And I took it like first week of January. I'm still in it. I'm up about $130 right now per contract. Okay. I've been up as far as like $200 and something, but it's been helping me offset another trade I am in on copper. Copper is open right now. And as of right this second, it's beating me up a little bit. But for the most part, I'm doing okay in the portfolio. Let's go back to the February and see, that's still there. The opportunity, the algo on the system, on Seasonalgo, still saw it as a good opportunity. So it went ahead and still put it up as an opportunity for February, okay? So let me step into my Daniel's trading account. This is my demo, okay? This is my demo account. And I'm going to go ahead, and it looks like it migrated my my watch list over from my real trading platform. Okay, so let's get into this trade. I'm going to erase this spread, and I'm going to create a new one just so you guys see how I work it, at least in Daniel's trading, and how I put the trade on. It's the first couple of times it can get complicated for the newcomers, but don't worry, you have us to guide you through it. And then you also have the help from like your broker. Believe me, they will help you put this order in if you're ever questioning anything. They will help you. Like, Daniel's Trading is going to have their own way of putting the order in. They're going to have their own symbol setups, not necessarily the symbol on the commodity, but like the configuration on how to pull it up. Everyone's going to have a different one. Right now I'm looking at TradeStation for everybody else, looking at maybe making a partnership with them. At the time of this video, there's not one yet. And they have a really nice, very easy, it's like almost playing like with a cartoon, like an animated drag and drop system. Only thing with that is currently right now, their minimum account to open is going to be $5,000. So I'm trying to keep things open for the traders that come in with a little bit less money. Okay. But it looks like it's a very desirable thing to look into. So I want to create, let's say, the spread on and just add that live cattle commodity spread here first on, let's say, my watch list, right? So I'm going to start typing live cattle, which is LE, and it's going to bring up all the possible calendars. But since I want to do a future time spread, I'm going to put space, and this is a calendar spread. So all I have to do is do space, and it's FTS, stands for future time spread with Daniel's Trading. And so I'm going to go ahead and type FTS because I don't want that front month that's there. I don't want G. Remember, I want to start with October. So I'm going to go plus V19. It's going to give me all the V19 options. And as you see there, it has the final December month there as the last one. So there's October versus December right here. So I can click on that. And that's that live cattle time spread. It pops up here and I hit OK. It's just basically going to put it on my board here. As you see, look at the last traded price, negative 2.225. And the charting here, I don't really use. I don't like it. What I really like, though, is the simple order entry system here. This is my brokerage platform. Remember, I'm not using it for charting. And I love the dome, the depth of market. That shows all of the volume. Okay, and then the simple order entry. Now, yes, you're probably wondering, well, that's very thin over there. The market is closed here right now. When it opens, all this volume will kick in over here. It is light. We're trading a very forward kind of a contract. We're not trading anything too close, but when the market opens, it'll show all the liquidity over here will pop in, and it gets pretty nice and heavy. Like if we were in copper, for example, right now, copper's open. We should even see that moving. That's thick. And the copper market is open right now. If we go to the metal by itself, because it is a Sunday evening, you're not going to see this moving per se as much as the metal itself, the outright. That is super thin. I mean, look at that thing. One contract at each price. If this guy decides here to aggressively sell, this seller here, 6 contracts, if this is one person and decides to come in and just sell market, he's going to take out all these prices here. 1, 2, 3, 4, 5, and then he's going to roll copper down to there. This thing trades like crude oil almost right now. Okay. So we know what spread trade we want now. Let's go back to our spread tab. This is just my little watch list here. This means nothing. I want to put in the order now. Here's the order screen for Daniel's Trading. It's very simple. Once I have this spread that I created here on the watch list, I have everything linked. Everything is linked to the quote board, to the depth of market, to the chart, so that the order automatically will get placed over here as a complex order. Well, it should be a complex order. It should be like this. So if you manually wanted to put that in, then you just click on live cattle. So it's a complex trade. Whoa, we got disconnected. Hang on, guys. That wasn't a good time to be getting disconnected. However, I think it was a good meant to be thing in the middle of this boot camp. Guys, make sure that if you are on a Wi-Fi network in your home, you have some kind of a backup power supply to that Wi-Fi. You know, I'm being a hypocrite in my own words right now, but make sure of that. I have an extra hotspot on my cell phone if I have to go as a backup. And then also, since I'm trading through a laptop, I'm not worried about power to the laptop itself. It's going to not crash. It's going to hold itself. Also, I have my broker's phone number. Not that my spread trades aren't urgency, but always have your broker's phone number and your account number saved in your contact list in your phone. So if you are somewhere and you need to call in and have them manually close a trade out or anything, it can get done for you. Just a quick little tidbit there, a little bit of word of advice. Again, with our spread trades, there's no sense of urgency for the most part. You should have stops, mental stops in place, and or you can use, if you have a platform like this, you can put stops, limit stops, and limit take profits on your depth of market, just like you would on any other trading platform for an outright future or a stock or something like that. So at least on the Daniel trading platform, the way I put in an order is I come into the complex here and I can just click on the actual spread itself. It's going to create that for me right there, that quote, the complete quote, live cattle future spread trade, October minus D. And I'm selling this spread, right? So I want to sell it. Okay, so it's automatically going to sell that front month. We're buying the back month. And we're not going market. I'm going to go a limit order. And let's say I just want to limit it at that price. Now, this is not going to really, it shouldn't fill me now. It's a demo. It doesn't matter. The market's not open. Now, being a demo, is it going to fill me? It may. It wouldn't be right if they do that, so I would doubt it. And I'll put all my orders here as a GTC. Good till canceled. The reason why this is important, guys, remember, if you put in an order, let's say, and you put it in during the daytime and in front of you, you got filled. But you want to put in an order now, a reverse order to take profit, or an order carry order, which is an advanced way of getting out of a trade. Let's say you want to put in an order to stop, your max stop. You're gonna manually monitor your profit, but then you want to put maybe a backup stop. So you max, keep a limit on your max loss. Well, you want to use this feature, GTC, good till cancel. After the business day closes and that trading day closes, anything that's left as a day order like this, and by default, everything is like this out there, guys, and all the broker platforms. If it's like this as a day order, then you may forget and not realize it, and this order will be canceled out. It'll just be, if it didn't get filled, it'll just disappear. So the next time around, you have a stop that gets hit, or at least you thought it would have, and you're out at work on the field or out on somewhere else, and you're thinking, well, I should have been protected. Guess what? You didn't, because of a little human error. It happens to all of us. So make sure you flag your order in as a good till cancel. Okay. And same thing on this buying. I want to limit my buying. I want to order to buy at 2.20, which is here, which means it's going to give it to me because all the buyers are here at 2.225. So this will fill me automatically if the market is open on cattle. If I come down here and say, well, I want to go where the other buyers are and put the order in there and go ahead and transmit this. That's it. So, as you see, the order was rejected on this particular case. We're recording this on a Sunday evening. Markets are open, but cattle market is not. Okay, so you see this order was rejected, even though it's a demo, and I'm glad this is realistic. Guys, this is why I love technology. Okay, it allows us to take advantage of these markets real time, even when you're learning. Okay, as you see, the action is not supported at this time. So we're not getting even fake fills on our sim trades. We're getting real reenactments of how it would really be, because you're not going to get this fill. Now, if this was your real live account, what would happen is it'll actually put it here as a working order and it'll hold it. See, the completer, it automatically rejected it. It'll put another status on there. So you want to follow up, at least with this platform, not with every broker. My broker here will put this on a different kind of a status, and they'll try to automatically fill it again the next day. Okay, so that's the demo. That's trying to put that order in there. Now I'm gonna try to find another market that we can actually try to get a fill today. But before I do that, I want to make sure I get all the details in here, guys. I'm putting these orders in. So let's go down that checklist. We came into our season algo. We found ourselves a strategy, a recommended strategy by the system. We analyzed it. Okay. We went in here and we hit analyze and we put it into the automatically into the builder. We added more statistical years to it, all of them. We analyzed. We made some price measures to see what's the most drastic hit we can take. Right? Our risk to reward. Okay. And then we've also looked through some other stuff. We've looked at historicals and seasonals. We've done all that. We've used what we like to use. Then we went in and we placed our order. Okay. So we figured out what was going to be our areas of entry, where's our exit areas, and where's our profit exit areas. We went into our platform and we try to put it in our trade. Now this market is closed right now, so we can't fill this on this video. So we're going to look for another market to trade and add to this so that we have another example. Okay, I was just looking, guys. Also, make sure that whatever broker platform you're on, you're rolling. Check your open interest and make sure that you're looking at the right contract. Earlier, I was showing you guys a contract, and even I made the mistake. There was some contracts that were expired in that demo because, well, one, really, I just don't ever hardly open the demo. Goes to show you. So I had expired contracts in there. I had to roll forward. Every broker platform is a little different on how you do that. You could just erase it and add it, or some have rolling features. That's what I did on mine. Most future commodities brokers have a rolling feature. Just kind of either right click on it and roll it, or I was looking and I see that the wheat market looks like it's making some movement. So for a Sunday evening, we can probably pull off this other grain trade here that shows the opportunities coming up for tomorrow. If we click on that, it's basically the September versus December wheat. This is a super awesome seasonal looking trade, guys. I mean, look at this thing. It's way up here at I'm going to pull this up and probably do live trade here on this one for myself tomorrow. But look at that level. You know, we're up at a really high resistance area. Okay, there's possible nothing but downwards from here. Let's go ahead and open up the different years. I like to look at all of them and then put it on interactive. We already have our entry areas drawn by the system. This is our recommended, right? We didn't have to build it. If I put this line up here, look at what you see looking across. If I put this straight line here, what do you see? Areas of resistance, resistance areas again, possible resistance after we get in. So it's a nice little area like on an edge to get in. Right? Be looking wheat, Kansas City wheat, it trades at $50 a point. So it's a small trade, but guess what? It's safe. It's a good trade to get into when you're new. Really good trade, guys, to get into when you're new. Okay? I don't even know what we would say our risk is, but our potential reward, if we took this out all the way, $687 per contract. Okay? Possible risk, I don't know. What would you like to say? Just a small break above there? $37. Here's a good one where you can use the 2% rule I've been joking about, because we just all kind of know that ain't going to happen here. So again, October. Oops, I'm sorry, guys. Let's shut that one off. September versus December. Now this is Kansas City wheat because I could tell from the KC. And my broker, it's different to bring it up. It's KE. These are those little learning curves I'm talking about. That it's little tedious things, but once you get it down one time, two time, you're used to it already now. So it's not tedious. No, it's not annoying anymore. In the beginning, I had to call my broker, email my broker for a lot of these things. I just couldn't pull it up. I can't pull up. The broker platform itself was just making me not want to trade. It just, I just wanted to trade something easier, and it just wasn't worth giving that up like that. In fact, actually, here's the right ticker, KE. U19 minus KE is decent. Okay. So again, let's look at it a bit if you wanted to, break it down, look at the historicals, depending on what you want to do, the continuation charts. I don't do this much myself on the continuation. You can look at future. Sorry guys, video got cut off there. I had to catch it and redo here. So continuing, you can look at futures if you guys are COT traders. Remember, here's your nice indicators showing on the charts. Your commitment to traders. You can look at your stacked options, see where the price of that commodity, that spread is compared to all the other years. Combos, which I mentioned I don't do. You can back test it out. How many times, how far did we draw down and what was the worst dates? What was the worst things before these things all became winners? Okay. What was our most precise entry dates? What was our most precise exit dates? Looks like it's all in the first week of ending of July. What was the best dates? You can know when you can anticipate to get out of these sooner. It's all just basic research right here at your fingertips that you don't even have to do. The system's doing it for you. 155 days on average this trade. You can get out quicker when you see these, seasonal. You can optimize and then use all these other things with which I don't. So what are we trying to do here? This is a selling opportunity. Okay? And again, we're selling September. We're buying December. We have very minimal risk on our hands. Total maximum reward. And I'm going to run the margin calculator too. I didn't do it on the last one. I apologize. On the next example here, let's pull this up. So we see the grains are trading really lightly. Where's our wheat? This is Chicago wheat. We can pull up Kansas City. Let's go ahead and pull up the outright. This is the current month. There has to be some action. Just see a little bit of movement. See people adding. I just wanted to see that as an opportunity for us to put on the spread to see that the market is active so we can get in. So let's go to spreads. I'm going to go ahead and create the spread now. Okay, so I'm going to go KE. And it's a future time spread. And it's going to be the plus U, which is for September 19, minus Z19. This will all come quick to you guys in the future here. Doesn't take many times to get it. And now that I'm down here, I got my time spread that I want to sell set up. I can place my order, go to my order screen, and it's already here. I just flip the side over to sell. I'm selling the front month and I'm buying December. I might as well put a limit order and say, okay, I'll buy at 1,475. Good to cancel. I don't know if this will go through. The fill has been added. Okay. And we sold this spread. We're done. I always keep my confirmation here. Side note, I like extra confirmation before I do stuff because it's a reminder to me sometime when I'm rushing. Okay. So we should have our position on now. It's going to reflect like this. It's going to reflect the two actual, outright contracts, but it's down as a spread, and our broker recognizes it because they're a spread trading brokerage that specializes in that. In fact, back to our margin calculator, let's go ahead and add both of those contracts and see what they would have cost individually. U19, we're selling. Okay. That would have been $1,300 a contract, $1,320 a piece. Okay, if you legged in on a brokerage that doesn't do things like this, let's go KE. And let's add December. And we're buying this month. So now they're checked off, they're enabled. I'm going to calculate it. Look how you're putting up $209 in span margin. So you're putting up that much deposit out of your let's say $3,000 or $5,000 or $10,000 account. Now with this, guys, you can get a little more aggressive and go more contracts. You're in a safer bet trade. Okay, you can make that discretion with yourself and say, well, I'm not going to take a lot of other trades right now. I'm just going to stick with the grains because they're the least volatile. They're safer. This looks like a good clean chart. With the 10 grand account, hey, I might trade 5 or 10 of these things. And you're utilizing $209 each time for the span, your reduced span margin, okay? Right there per spread for each one of these. Now, let's go to the account summary. We haven't, where are we at? Open P&L. This must not be calculating it accurately. Open minus 12 plus. You should have a summary here. It should update. I don't know if the demo has a delay, but it'll update soon. We're down a tick. According to this, we're down one tick. Minus 1250. So it's 1250 a tick, guys. $50 a point. But I would, go ahead and put that in there. That's done. Your spread is on. Okay, you've utilized Seasonalgo to find the opportunity. You've checked all your analyzations you can do. You've analyzed. Okay? You've probably spoken up in our group, maybe done some stuff like that, but this is if you're completely alone. You're busy. You put on your trade, walk away. You got a 2-to-1 possible risk-reward ratio here. In my opinion, you have way more possibility to win on the risk-reward ratio. And you just walk away now. That's it. We're done. Our trade is on. Okay? We'll check up on this. But the trade entry is in. And you put on a future time spread trade. If you want to inquire about this platform and you guys have questions about it, let me know. Let's say I want to put, what I like about this is the depth of market. If I want to get out here, let's say, okay, I'm selling this spread, right? So I sold this spread. Excuse me, and that's why we're down that one tick. We aggressively sold. I sold down this way. I should have sold at the 1450. Probably wouldn't have gotten filled yet until these other two guys got filled. But anyway, regardless, that happens again from rushing. We can say maybe, okay, just for the heck of it, I want to show you. I want to get out, over here at 0.1650. I'm going to just left click a limit order here. You see, it's going to put in an order to buy that back, and it adds my order here. I could right click and cancel that order. That's it. That's what I love about the depth of market. You can put orders on these spreads on the fly, just like that. As long as it's not a customized spread that you just made up on your own, that you are going to spend some pretty, span margin is not going to probably be included anyway because it's some kind of like synthetic deal that you're building on your own. Then this feature right here is just awesome. It's very easy. You do this, guys, a few times, you're spread trading, no problem. Okay. Let me see if I have anything else to add here before we go into our technical trading lesson. Doesn't appear that I have much else to add for this lesson. We're gonna get ready to go into our next one. Oh, look here, your initial contract that we bought. Okay, the spread on the wheat. That's our maintenance margin right there, and it will reflect that it's subtracted off of your balance. Isn't that amazing, guys? I'm just so excited to show you guys this. I hope I hear a lot of good news from you guys. I anticipate that I will. But let's move on to our next lesson. Right? And that's going to actually be an extra little thing. Has nothing to do with the spreads per se. Okay, but it's more technical charts. It shows you guys how I learned technical charting, how I use levels, and just one indicator to gauge momentum and weakness in a certain direction. I use it specifically on my TD Ameritrade platform, and I trade crude oil from there. TD Ameritrade has different kind of span requirements. They don't have them up front. They price them out in the evening on the back end. So, but on crude oil, they actually have it set up to just like this. So it's like really reduced span margin up front. And because I trade technically on the crude, I just use that chart there, and it's much easier than this chart. I actually have it really nice. I'm going to show you guys a few examples on that next upcoming lesson on like maybe just had a chart on the ES, the ZN, the 6E, which is all like, the S&P 500, the 10-year Treasury note, the Euro FX futures. Then I'm going to finish it off with the crude oil in that lesson and show you guys a trade that I'm actually in and how I take directional bias on technical, but I just still do it as a spread. Why? Because I don't like getting whipped around from crude oil. That's why. So on to the next lesson, folks. Thank you. See you there.